What is up, investors? Back again, another stock analysis. This time we're taking a look at Nike, ticker symbol NKE. Full disclosure before we get into the video, I do own shares of Nike, but it should not impact how I analyze this company. In fact, I actually want to buy more shares. So if it goes down because of my analysis, I might actually be happy about that because I kind of want to pick up some shares, and we'll talk about why here as we go through the video. Now, like I said, they just reported earnings today, so it's actually really exciting. So I'll go through those. We've got the 3 months ended. It was their Q4 technically. So they've got their 12-month ended, and Nike's a really interesting company because we've got this whole COVID-19 thing happening. Nike had all their stores closed. They had sports basically around the world not being played. So Nike, out of all companies, should be very, very heavily impacted by the virus. And as we go through the financials, we'll definitely see this. I mean, right off the top, you see revenues down 38%. So, but as we see here, this is some after hours action after Nike posted these earnings, only down about 3%, which really takes us back to a price that we saw like last week or so. So not heavy action in Nike. We'll see if the earnings that we go through here in a second really translate to this stock trending down. But we see this stock's been in a nice uptrend for the last year. We had made this COVID-19 low. I don't remember if I was able to grab a few shares, but it literally hung on this just for, you see here, just a couple days, and then boom, right back up to $80 a share, and then bam, we're back up to kind of near all-time high. So we're in a 52-week range. We're close to it at 105. Even if you factor in this after hours action, we're still close to a 52-week high in Nike. Now, forward PE of 43, and I will say that's a little rich for the most part, but Nike tends to trade in, if you want to go and look at a historical PE average, usually above 20. So while 40 is kind of high, Nike typically sells in a higher PE range than most companies, especially ones in the clothing and fashion business. Now, the dividend yield is low at the current share price, but if you were to buy in shares maybe a few months ago, then this yield would be higher, but you're about at a 1% yield. Very little short interest, particularly because of the massive size of Nike in relation to their competitors, and also the dividend kind of keeps the shorts away as well. Market cap at 155 billion. We'll keep that in mind as we roll through the financials. Now, these financials are exciting because, like I said, even if you're not interested in Nike, there's a lot of things going on here with the virus that impacts Nike. So what you can do is say, hey, let's see how it impacted Nike, and it might impact Lululemon, might impact Under Armour, it might impact maybe even like car makers or any kind of stock you can think of. Nike, you can kind of relate what you see going on with Nike because Nike sells in China. Nike sells all over the world. Nike has stores. Nike sells online. Nike's related to sports. There's just a lot of things that Nike's involved in that you can draw parallels to other companies. Now, we see here, 3 months ended. This is total COVID-19 impact. We've seen most of the reports I've gone over here on the channel had very little, maybe a week or two of COVID shutdown, at least in the United States. This is almost complete shutdown for Nike. We see in the previous period last year, they did $10 billion in revenue in the quarter. This quarter, $6 billion. That is a 38% decline. That is rapid. If it wasn't for COVID-19, you would have seen this stock slide off. Oh my God. I can't even tell you how much this stock would have slid off if there was no other reason for a 38% decline in revenues. But they have a very good reason. Most of their stores were closed, especially in the US and even around the world. Now, 12 months ended, we see here, we slid in revenue, not something you want to see when you're paying a forward PE of over 40. But again, let's just normalize this. Let's give Nike credit for flat year over year. So you can add about $4 billion to this if they were flat. And so they would have raised year end or 12-month earnings. And so that would have been a positive. Instead, we have this 4% decline, which is not too bad. If Nike's able to reopen the stores, turn things around really quickly, get things back back up to speed shouldn't be a big deal. Cost of sales, typical in a fashion company, not like software. We just looked at some companies where the margins are huge, like Adobe and Microsoft. Not in fashion. We see the gross profit margin here really slipped down to 37% in the quarter. Last year was at 45, and for a full year, they were in that 44 range. So not only did sales take a hit, but margins took a big hit. So that'll be interesting to see if Nike's able to drive these back up the next few quarters back into the mid 40s. That would be a positive sign, I think, for investors. Now, they did be able to cut some of their marketing spend. We see they spent $1 billion in a quarter last year. They trimmed that down to $823 million, likely because you're not buying ads on TV and Facebook ads and Google ads and things of that nature. So they declined, advertising by about 20%. That's quality. Operating overhead, this is all the other expenses. They kind of roll this all into one. We got about $2.3 billion. So we have our total expenses here at 3.1, and we only made $2.3 billion. That leads to an $804 million loss, which, man, I haven't seen that from Nike in quite a while. Last year, they churned out $1.2 billion, and I would say that's typical for Nike because you see they made $4.8 billion at 12 months ended, and if you annualize this number, that's about what you get to, about 4.8. So we trimmed the the net income. Let's just slide down to net income. We made $4 billion last year. This year, $2.5 billion. So it slid off considerably, over 38%. Notice the decline quarter over quarter, 180% decline. They made $989 million in the previous period, lost $790 million. So obviously, the longer this COVID-19 thing stretches out, and if they have to, I saw Apple close stores today. If Nike has to close stores, if there's a second wave, whatever it is, I'm not trying to say I'm a doctor or trying to predict anything. I'm just telling you what's going to happen to Nike is their numbers are going to go down. And if it happens to Nike, one of the world's leading brands, okay, you better believe it's going to affect Adidas, Under Armour, Dick's Sporting Goods, any Ralph Lauren, VF Corp, any of these clothing companies, it's going to be the same story. So can Nike survive losing $800 million to $1 billion in a quarter? Absolutely. Take a look at the cash and cash equivalents, went up 87%. We know that's not from earnings, so we'll see where it came from in a minute, but they had $4 billion last period. In this period, they have over $8 billion. Now, that's not the most interesting thing. We know Nike can probably survive. They've got some cash. They can afford to pay LeBron and Tiger and Jordan, so they probably can afford to keep the lights on for a while. Inventory. This is something you want to focus on. Any company that had stores closed, you want to keep a look at inventory. Look how much their inventory climbed up. They had $5.6 billion in inventory. Now they have $7.3 billion because they weren't able to sell anything, and they probably had more coming. So they probably had spring and summer styles coming, and they weren't able to sell out of like winter styles. And so Nike has a ton of inventory. And while I don't think it's really going to impact Nike too much, they should be able to sell this through their outlet stores, through off-price places like Ross and TJ Maxx. The problem is what did I just tell you? Margins. So there's going to be a lot of off-price and on-sale Nike stuff so they can kind of churn through this inventory. So I think that's going to keep a lid on margins a little bit going forward. Now, if Nike's able to offload this inventory and then get margins back up to the mid-40s, boy, you should see this stock maybe start to make new highs or at least hang out at this $100 level. At least that's what I would think. Now, finally, total assets, you got 30 million. It got boosted quite a bit by this cash. Where did that come from? I think it came from this long-term debt. Notice long-term debt went up 172%. They had call it 3.5 billion last period, all the way up to 9.4 billion. So that's about where that about $4 billion worth of cash came from. I think it came from this long-term debt. They probably had a facility, almost like a credit card that they could draw on, probably at a very low interest rate. Don't really worry about that too much, as long as Nike's able to start churning through some of this inventory. I think the thing you want to look for with Nike when they report their next quarterly earnings in 3 months, see where this inventory, are they able to chew through this $7 billion in inventory? And can they tick these margins up at the same time? If they're able to do that, boy, I think you'd have a winning combination there. Now, finally, this is really interesting too, because like we said, this is all this 3 months right here. This is all COVID-19. But in China actually was opening up a little bit and starting to get things rolling. So what we can do is look at China and say, well, let's see how the consumers in China are reacting to reopening. And then maybe as North America starts to come around, August, September, and into the holiday season, maybe the North America market will start to mirror China. We see actually in this quarter, look at this is not bad, except for equipment that's down 17%, but it's such a small amount. This is only about $30 million. That's nothing. But look at this. Footwear in China was basically flat in a quarter coming off of COVID-19, and China was really hit hard. I mean, they had a lot of store closures, a lot of quarantines. I mean, it's a big country. So they had a lot of impact in this. We see the United States impact obviously had more, China was just reopening and kind of getting things going in this quarter. North America was basically shut down, and we see 41% decline in footwear, 56% in apparel, and 60% in equipment. We see now for the full year here, it impacted on the full year as well. But if you normalize this, say you give credit for Nike to have flat, so you just take this number and put it here, all these numbers would have ticked up. So I think investors are going to give Nike a pass, and they might give most apparel companies a pass in the quarter where they had to close all their stores, because a lot of investors are going to look at this China number and look, the China numbers were actually up year over year, and that is including a large percentage of the time, or at least about a quarter of the year, China was basically shut down. And so Nike was able to grow their revenues in China when the company was essentially shut down for several months. And so that is a very, very, very good sign for Nike and probably most apparel companies that are as big and as global as Nike is around the world. So we see here down the line, negative numbers except in China. I think that's a positive. I also think that's why the stock is not selling off as rapidly as we see here. Now, so where would I buy Nike? I actually did a video not too long ago that said, hey, if Nike slid back into that $70 to $75, $80 range, that's where I'd like to get it. I was kind of hoping that the shares would sell off rapidly. It could be that this trend continues. Nike just gets negative and the trend breaks here and the stock breaks down a little bit. I think it's possible that this stock gets back into the mid 80s. If it gets back into the mid 80s, I like it there because I think Nike is going to be able to rebound here in North America. The virus, everybody pray and knock on wood that the virus will eventually go away. And I think most things will get back to normal. When that will be, I'm not exactly sure, but I think Nike can survive another even 12 months of this. I think they're going to be able to survive, especially if sports come back. I think the attention on that. So am I buying up here at the $100 level? Hey, if you never bought Nike shares and you want some exposure to it, I'm not going to tell you no. I would open up a very, very small position. If you have $1,000 you want to throw at Nike, I probably would only, with free trading commissions now, I'd probably only buy one share, maybe two at the max. But if it pulls down to this $80 range, there is a lot of demand for the shares at this $80 range, and it extends back quite a ways. So I see that as acting kind of, we saw that was a magnet to price. You had most stocks make these COVID-19 lows and then they snap back to a price where there's a lot of demand and it's at that mid 80s level. So that's where I'd like to buy Nike. Personally, I'd add a couple shares at that level. If you don't have any position or any exposure to Nike, I think you could be a little bit more aggressive. So if you have $1,000 to put into Nike, I think you could go maybe you could go 5, even 8, maybe even 7 to 8 shares of Nike, almost a full position if it drifts down to this $80 mark. That's on $1,000 investment. So there we go. Taking a look at Nike. I think it's a bellwether. It will preview what's going to happen, especially to apparel companies and especially companies that had a retail footprint that was closed most of the March, April, and May here in the United States. So that about wraps it up. If there is a stock you'd like for me to cover here on the channel, leave me a comment below. I'll get to it as quickly as I possibly can. Hit that like button and that subscribe button if you like what we're doing here. That really helps the channel as well. We'll see you guys again soon. Good luck with your investments.